Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for September 5th, 2021. If you live in the US, I hope you're enjoying a nice long weekend with your family and friends, being safe. And by the way, it is a long weekend for me, so if you like these videos, give me a thumbs up, please, on YouTube if you're watching us, because, hey, it's my weekend and I'm trying to get it started. But I wanted to do this here for you first. If you guys are in outside the U.S. and in different parts of the world, I hope you just enjoy, last days of summer. When we come back on, well, we won't be broadcasting our F.A.C.E webinar on Monday, but on Tuesday, when we come back, you're going to start to see liquidity come back. So that's going to be great, right? So enjoy the next couple of days, and I'll see you definitely on the F.A.C.E webinar. But before we get started talking about the dollar and its reaction post non-farm payroll, I want to mention a couple of things and what we got going on this next week. But which, by the way, the Fed is going to kind of move out of the picture, and we're going to start focusing on other central banks this week. But let's talk about Forex Analytics. If you haven't tried it, you should. It's only $1 for 10 days. With your $1, you get the full premium package of Forex Analytics. Probably the biggest benefit, besides the technology and the mobile app that you get with either version, but besides all of that, really the most important thing is being able to access the live trading webinars that we do throughout the course of the day for all of the Forex Analytics clients. You can access that when you're trying out Forex Analytics, plus you can get to our chat rooms and the advanced analysis that we offer. So try it out. It's only $1, 10 days. And then even if you decide to go with the light version, you can still at least access all the live webinars that we're analyzing the markets, giving you some trade ideas throughout the course of the week for our community exclusively. And that's only $20 a month. So try it out. Let's get into the what's happening this next week. But let's talk about what happened actually on Friday. So if you guys don't go to the F.A.C.E webinar, which is free, it's a Zoom webinar. We do it every day for, people watch on YouTube, they watch on Twitter, on Periscope, they watch us on Zoom. You have to register on Zoom. So to do that, just go over to our webinar page, right? And then click over here where it says free F.A.C.E webinar. You can actually get to the link just in the description below. Make sure you log in, because we really discussed the dollar and what the dollar was doing going into the jobs report and how it reacted. And I want to talk a little bit about the way the dollar reacted and why. So first of all, the trade I was looking at, and if you were live with us on Friday, I was looking to sell the euro dollar on a move above 119. I said, as long as the data is, the data is not horrible. The headline number, we create, let's say, 500,000 jobs. I think the dollar is going to be bought, because I don't think it's going to alter the Fed's view as far as their taper timeline, right? So what happened is the number was way weaker than expected, And so what happened there, as it was super weak, was we only created 235,000 jobs, but the unemployment rate did drop, and actually it's the wage data that got the market's attention. And to be perfectly frank with you, I think that they're going to continue to taper and remove this excess monetary policy, this liquidity that they've been providing since COVID struck. Let's talk about that for a second and why. We're dealing with COVID. Obviously, the whole world's been dealing with it since the beginning of 2020. It shut almost the world down. Of course, central banks had to take this extraordinary measure to provide massive amounts of liquidity to the market. But here we are, Delta variant, COVID. We all know that we've got to deal with it. The world's dealing with it. And it's probably something that we're going to deal with, hopefully not that long, but probably for a while. But has it shut down our economy? No. I mean, are we going to have to wear masks? People might travel a little bit less. Sure. But are we shutting down like we did, the beginning of 2020? No. And so the Fed knows that they need to remove that. Now, whether or not the Fed or any other central bank's ever going to raise rates, that's a completely different question and probably not a conversation for right now. But I think the wage data and the fact that we are still creating jobs and the revisions were higher, and we know that those numbers are going to be better going into the next couple of weeks because wages are going up, people are losing their benefits. They're going to say, well, hey, I can make money here because employers are offering so much. People are going to go back to work, and we're probably going to see those numbers improve over the course of the next couple of months. So the reason why I say all that is because I think that the euro dollar trading to 119 was an opportunity to be a seller. Now, the ECB does meet this week, and we're going to talk about that. But I think going into the beginning of the week, as long as we're below this 119.10, 119.20 level, I think we could, pull back towards 118. Okay, and we're going to come back to the euro in just a bit. But that's how I approached the dollar on Friday. And if you didn't listen in live, make sure you listen to those webinars live, because not just myself, but the rest of the team is chiming in, talking about what's happening. And if you're not fully aware from what's happening in the fundamental landscape, the macro landscape behind the scenes, you should be. It's not just technicals. We gotta make sure we understand why the market's moving the way it's moving. All right, and that goes into everything else that we're going to talk about. So let's talk about the RBA. So if you guys are not aware, Forex Analytics, we've been partnered up with one of our broker partners, one of our couple broker partners right now is Pepperstone Securities. Pepperstone Securities is out of Australia. They're out of Melbourne, excuse me. They have offices in one in London and wherever else. Anyway, they are an Australian-based company, and I was talking to Chris Weston, who's right here. He's the head of research, and Chris and I were having a discussion because we're working on another project, which you guys are going to be happy about in the future. But we were just discussing in his words, the draconian measures that are being taken in Australia and have been for the last year and a half. And will those draconian measures really influence the RBA going forward? Because the RBA is expected to start tapering soon, and whether or not they are hawkish or dovish probably has, and why am I on the Kiwi here? Will have more to do with what the Aussie is going to do from here. So the Aussies had a fantastic rally from the lows, and I thought we were going to trade towards 70 cents. We only hit basically 71 cents, and we bounced like a bat out of hell. Now let me remove this because I'll talk about it live with you guys versus just our clients. I think the Aussie can stretch its legs to 75 cents, possibly, on a hawkish RBA. But I question if the RBA is going to be hawkish. They might want to err on the side of caution, and if they do, what that's going to do is create a false breakout above the 74.20. So what I want to say to you guys is if we break back below 74.20 following the RBA, and by the way, the RBA is Tuesday morning if you live in Europe, Monday night if you live in the US or North America. So this will be happening at the very end of the holiday that we're dealing with. Watch the RBA, because if they are a little bit more dovish and we slam back below 74 cents, that's going to be a false breakout. And I do think that the Aussie dollar has squeezed so many shorts out of the market that it's probably position-wise, it's probably more neutral and ready to resume its downtrend if it's going to do it. Obviously, if the RBA is hawkish, we could scream back up towards 75.20, 75.30 again. All right, so watch the Aussie dollar. I think that's going to be in focus. Also, let's talk about the Canadian. So the dollar Canadian, I think, is more of I'm not expecting fireworks out of the Bank of Canada this week. I think it's going to be more of a non-event. But I think technically, this is what has to happen for the bulls, and technically this is what has to happen for the bears. So let's discuss what I mean by that. The rejection of the previous support back here at 129 and 129.40. I'm obviously, hindsight is 2020, obviously, but when we were trading at 128, I knew I wanted to be short. I just figured we'd rally a little bit before rolling over, but we just went straight down. And I kicked myself in the rear end for not shorting it up there because I knew it was such a big technical level that I should have just sold it. But what it did do, and let's make sure we acknowledge this, is that it did make a higher high. And for right now, we are making higher lows. Okay? We are. Now, what's going to alter my view is technically for the Canadian dollar is if we break back below 124 and a quarter. Again, I don't think the Bank of Canada is going to be a market mover this week. I may be wrong, but I don't think it's going to be. So outside influences may be influencing the dollar Canadian, which would be like crude oil moves, the dollar in general, that type of thing. So, let's watch support here at 124.20. If that doesn't break, then we will start making higher highs and higher lows. If we break back below 124, I think you have to be bullish the Canadian overall, and you could express that through the Canadian yen, the Euro Canadian, other, it doesn't have to be the dollar Canadian, but that's the way I'm viewing the dollar Canadian right now. And by the way, a move back above 125, well, let's just call it 126. A move back above 126 would be, in my opinion, bullish. Then we would be creating some sort of channel or higher highs, higher lows, which is still maintaining a bullish structure. Okay. Have you seen Austin Powers? I think I've watched way too much Austin Powers. Structure. Okay. Saturday on my holiday. Again, if you guys like this content, give me a thumbs up. If I feel a little, if I sound a little goofy, it is. Did I say Friday? It's Saturday on my holiday. So, as a thank you, give you a thumbs up. That'd be great. Also, subscribe to this channel so you don't miss any of our content. All right, let's talk about the euro because now we're discussing the ECB. There's been a growing consensus amongst ECB members that they need to be a little bit more in the camp of tapering. I think I think it might be a little premature, but we have to watch the ECB this week. That's going to be on Thursday. So this dotted line right here is 119.10, right, that we talked about. I think really critical support is going to be right here at 118. And this is going to be your resistance right here. And I assume, and I'm just, generalizing here, I assume we're going to be somewhere in between going into Thursday. So we're going to be on Thursday. We're going to have a better idea if we're going to head back towards the 200-day moving average, which is right here, or we're heading back down towards the lows. It really is going to be a couple of things, I think. Is the ECB, does taper seem like a realistic expectation for the ECB moving forward? I know you Europeans are going to have your opinions and you're entitled to them. I'm just giving you my views. Or is it realistic to believe that the ECB might start tapering? Then if so, we're probably heading back to the 200-day moving average. If it seems like it's never going to happen, we're going to probably revisit these lows. Also, we have to keep in mind that the S&Ps are at the upper end. They're at all-time highs in the upper end of this ascending wedge. In the event that the S&P starts breaking down, that is going to strengthen the dollar, and you have to take that into consideration when trading any other FX pairs, no matter what the central bank is doing or saying, okay? Because I do believe that the dollar will catch a bid. That means it'll be bought if the S&P starts to give back some of these gains. I don't expect that the next week. We'll have to see over the next couple of weeks once traders get back from their their long holidays and they go, hey, what the hell are we doing way up here? Looks like the economy's starting to slow. Earnings are doing this. We need to start selling some stocks up here. That mentality could take place, but it's probably not next week. It might be over the next couple of weeks. But let's just continue to watch this wedge here. And there's a lot of reasons why people would start thinking they need to sell up here. But I'm not going to be bearish equities until we're well below like 4,400. 4,450 is where that trend line breaks, but really we got to start getting below 4,400 before I start saying, okay, now I actually want to buy the dollar more from a risk aversion point of view. One other thing that I need to point out, I guess, is the dollar yen. The dollar yen's trading at the lower end of its triangle. It's trying to break down, and if stocks start to move lower, it should strengthen the yen as a whole against other currencies. So guys, if you like this content, again, give me a thumbs up. If you're watching this video, you like it, you think you're going to get some great ideas out of this, I appreciate it. Make sure you subscribe to the channel so you don't miss any of our content that we do throughout the course of the week. Yeah, like even this last week, Luke Groman, he was interviewed this week. It was an awesome interview. I hope you guys were able to listen in. But if you don't want to miss any of these great interviews that Dale Pinkert does throughout the course of the week, make sure you subscribe to our channel down below on YouTube. So guys and gals, I hope you have a great weekend. Thanks for spending your time with me, and I will catch you on the flip side Tuesday morning on the F.A.C.E webinar. See you there.